Hello, today is November 27th, 2021. We always start with our disclaimer, so let's do that. It's my trading plan for Monday, November 29th. Just remember, I can be completely wrong. Any trade you make should be at your own risk. Friday's stub session actually satisfied a lot of loose ends for me. This was the pattern with the early high, which we got. And Monday should have the early low. When you fail, you should drop in a straight line, which you do. I had some targets. We said ultimately we'd see 46.6807. We got that. We had no target we get to cross off the list, 46.2556, so we'll do that as well. Hard as it is to believe, futures were up when I made this call. I said they weren't at their highs, but they were higher. I said if we gave back all the overnight gains, we'd be in a position for a wave 3 down. I think that's what happened. These are my calls for next week's daily patterns. Let's talk about some more loose ends. We had an ultimate sell signal on Tuesday. We got the minimum. We said almost always we get more than the minimum. We got that. We said if Wednesday's session did not rally, it could lead to a big drop. As I've said before, I count the next day's open as a substitute for that day's close. So if you use that rule, we didn't rally, we had a big drop, we had more of a drop instead. We also said if this pattern drops early, even if it rallies the rest of the day, it should lead to further declines. Now, as far as Monday's concerned, we have a high volume spike, even though it's a shortened session. I don't know if I've seen that before. And volume spikes in the E-mini tend to be associated with short-term lows. But I would anticipate that Monday, because of the increased hours, we're going to have more volume than this. So because we're undercutting this Bollinger Band when it's flat, and because we're having a volume spike, either this or larger Monday, it's possible we have a short-term low early next week. That doesn't change the fact that I still have us in wave 3 down, and I can't count that wave as being completed. And that's not good. The real question is Peter Eliades right about this being a generational top? Now, that wasn't how I was counting things, but he's pretty smart, and I'm willing to change my mind, get my eraser out. A number of things are compatible with this. We have interest rates at historic lows. I think they're going up because inflation is going up. We have a very long bull market. These things don't last forever. The valuation levels have been off the chart for a long time. What happens at tops? There was capitulation the day we had a big drop in the money market funds, bear market funds from Ritex took a big drop in their assets right before the high. The Mark stuff is calling for a major high here. Now, I've been saying his stuff failed. That probably wasn't quite right. His stuff measures overextended conditions, and the overextended conditions have been dealt with by consolidating over time rather than dropping in price. And what's different about this time is we now apparently have them correcting in price rather than time. We've undercut some prior lows. That didn't happen before. I have too many lower MEJT targets. I'll show you the figures, but there's just not precedence for this many unsatisfied targets over a period of less than 2 years. In the past, some of those targets get erased. You have the Lindsay stuff, the Eclipse. If you're a fundamentalist, we have the Omicron variant of COVID-19. Gives you a fundamental reason for this to drop. Here's the marked sell signal on the daily chart. Once again, you're undercutting this lower band when it's flat. That tends to be associated at least with a short-term low. And if you're going to have a collapse, you want to undercut this bar here within 3 bars of getting bar 13. Well, that didn't happen. Here's the high. Bar 13 can't finish really on the weekly chart of the demarked sell. Now, these things don't go into alignment very often. It takes years to form these patterns on the monthly over here. And the last time I remember them being in alignment, I think, was at the 2003 low. I can be wrong on that, but that's the last one I remember. Anyway, if we're going to have a collapse, not counting this bar, you want to undercut 41.66.45 within 3 bars. 3 weeks. Nothing's impossible, but that seems kind of out of reach to me. Well, here's the monthly chart. If you're going to have a total collapse, you want to undercut 29.65.24 within 3 bars. But 1 bar is almost over. So you'd have to undercut this level by the end of January, which seems like quite a stretch, but you never know. Now, when these things are in alignment, it's pretty easy to call for a top if this holds. He has a way of estimating how much we're going to drop. I'm not saying he said it this time, but his technique is to take this high and then take a Fibonacci retracement. So if we get a 38.2% retracement from this high, we'd be at 29.31. Now there's support under this line. So if we do drop that low, and it takes longer than 3 months, you look for support here, right at his DDST line or right at his percentage retracement. In the unlikely event that we undercut this by the end of January, which is 3 bars, you look for a 61.8% retracement around 1812. I'm not saying he's saying it for this particular instance, but that's what his technique is in the book. And of course, I'm not saying it works every time. But if we do have an extended drop here and these things work, I look for support in the middle 2900s. Doesn't mean other numbers don't work. These are the failed or unsatisfied MEJT targets since I came up with the system 19.5 years ago. They have about 6 standard and 1 ultimate target, which haven't printed in 2021. You won't see any other 2-year period with 13 failed targets. Unless this is the first time, I would expect a good number of these targets to retrace, probably even going into the 2020 range. We have 3, 5, 6. We have 7 ultimate targets plus 1 from this year. That's 8 ultimate targets in 19.5 years, which haven't been seen. So that's over 2 years between unsatisfied ultimate targets. It's reasonable to assume that some of these ultimate targets might get erased from this list. It's pretty uncommon for one of these not to print, even though I get 150 of them a year. I have us in wave 3 down. I can't count it as being complete. It says the wave count I've been using, but it's not the only count. If it works, when wave blue C, if it's as big as wave A, it takes us down to the 3700s. Well, this is the longer term count I've had for a long time. It doesn't break any rules, so it's Anything that doesn't break any rules is a valid count as far as I'm concerned. If we get to Mark's rule applied, we get 29.3168, which takes us right here, which is a valid support level. So it'd be a pretty thing if it happened. Well, this count doesn't break any rules. I've had it for a long time. I have to admit it's not a very aesthetic count because it counts this rally as distinct from this one. Doesn't make it wrong, but it would be nicer if we could tie them all together. This is an attempt. If you can count this as a 5-wave structure, you can count it as a completed 5-wave structure. I'm not buying this count because I can't count this as 5 waves. Usually when you get an impulse, it's pretty clear. You don't have to fudge, you don't have to look for it, it's just there, and I can't find this here. The only way I have to make this thing all tied together is to consider the possibility we've been counting this wave wrong from the beginning. We had a drop that ended in 2009 that was a clear corrective wave. What if this whole structure is part of that wave? What if this was 3 waves down for A and this is B? If it doesn't break any rules, it's a valid count. So if that's A of the corrective structure, you can now count this as an ABC with absolutely beautiful fibs. It doesn't break any rules. It explains why it's hard to count this move as an impulse. It doesn't have 5 waves. Explains why it's hard to count this as a 5-wave structure. The fibs are absolutely gorgeous because C is exactly twice A. A breaks up into an ABC. C breaks up into a clear ABC. The fibs are compelling, and what really makes it interesting is if this is wave B of a wave A, which ended in 2009, if that's right, if that's A and B just completed, wave C at twice A is 29, 25, 23, which is within 6 points of a 38.2% correction. This count doesn't break any rules, it ties everything together, and if it's right, and if we get wave C here, it gives us a potential target, which can be arrived at by a totally different technique. It's something to pencil in. Doesn't mean nothing else works. Monday's pattern has an early low. We could gap up. I have us in the wave 3 down. It's not over. The huge volume, despite shortened hours, suggests a short-term low is near. Monday, the volume should be larger. There are numerous candidates for the end of this rally. This one has characteristics different than the other. The wave count suggests the all-time high will hold and much lower prices are ahead of us. We go over the high, the count's wrong. Monday has the early low, and that's today's call.